What has been discussed from last week has been the comeback of the Tata Group stocks, the laggards, for example, like Tata Power, that have been playing catch up. How you saw in one day 90,000 crores of market capitalization being added in a day, record high. Market capitalization for Tata Group companies. How N. Chandrasekhar, as the top boss of Tata Sons, has been taking tough decisions. How it was his idea to get Air India, something Ratan Tata has also confirmed in an interview to the Economic Times. Talking about the new Tata Group version, the comeback story, the future plans. We're going to be discussing it with two gentlemen who understand this conglomerate so very well, Arun Maira as well as Mr. V.R. Mehta. So Maira, I'll come to you first. You have worked very closely with the Tata Group of companies. You have been a very strong observer as well. I think enough has been said and a lot more has been said about N. Chandrasekhar being the Tata Sons chairman, the kind of decisions that he has taken, which is now being reflected in the equity markets as well. The comeback of the Maharaja to the group too. Is this a group that you're now seeing with new vigor, new energy? We're still not talking more about the Tata Digital simply because we don't know enough about it, but this is a group which is now also talking about B2B commerce, for example.
Where one hand Tata's has been declared the successful bidder for Air India, and which J.R.D. Tata was so closely associated with, and enable the world to see that India could also fly high. So I want to keep that point. And the other is, yes, we are talking nowadays almost everywhere about when will the economy revive, every country and ours too. And the third thing, we have had visible to us in the last year, the misery of the people, most of the people of the country, certainly the people at the bottom of the pyramid. So I want to come back to J.R.D. Tata. He said, whenever I have to take a very tough and big decision, I first think of what is good for India, and then what would be good for Tata's. And as he said, if I then take the decision which is good for India, even though at that time it may not appear to be so good for Tata's, it ultimately turns out to be very good for Tata's also. So it's in that spirit I would like to make my observations, and I know I'm talking on a TV channel, which is the best channel, helping people to understand how businesses in India are faring and how the stock markets are operating. I think the world has come to a time we have to measure businesses with a new yardstick, which is not about valuations, but it's about values. The values that they embody and how they work and for whom they work, not for stock markets, but for the people. So this is J.R.D. Tata's philosophy. So given that, my observation is that people don't really look at Tata's or all companies through this yardstick. So if we apply this yardstick, we can have quite a different discussion than the ones that usually happen when we talk about how well our businesses are doing. So I want to put that out. And if you want to ask me then how I feel Tata's is doing, or businesses generally are doing with respect to being driven by values and not being measured by their valuations, I have many good things to say about the Tatas.
Of course, Mr. Maira, and obviously the valuation stock price becomes a reflection of what the business on ground is, and you've been a part of the Tata Administrative Service for 25 years too. You understand the Tatas like no other. So let's talk about the value that they're adding. So let's talk about the value they're adding, Mr. Maira. Let's talk about the value they're adding.
Exactly. But of the business on the ground and who benefits from it, it's clearly become visible that it's not so during the pandemic. Stock markets are at the highest in India and everywhere. They're even higher than they were before the pandemic. And why so? Well, the misery of the people around us has not yet been relieved and may take a long time to get relieved. So there's a disconnect between thinking that if you're doing the right thing for people on the ground, it's bound to result in your stock prices going up. It doesn't happen. So is Tata's doing the right thing with respect to the people of India? I'm saying yes, they are doing the right things. And what are they then? I would say that Tata's continuing to build up its manufacturing businesses, that side of the story, is the right thing to do. And they've had a tough time, perhaps in the automobile sector, which is the one I'm most familiar with, having worked there in Tata's for 25 years, and also the steel company, that these are basic things which people need, as
Hello.
well as, I mean, general people need,
Hello.
mean buses, for example, or commercial vehicles as trucks, basic things. So concentrating on those, as well as if they're produced in India by people in India whose skills you help to improve by engaging them and employing larger numbers of them in your business, then you are doing what's right for India. And by the way, that also helps to increase the market in India for other people who then sell, higher end stuff to the Indian people, where the incomes also rise. So if Tata's is concentrating very much on its founder's philosophy that we are going to build industries in India, built by Indian people, producing things for Indian people, they are definitely on the right track. They're definitely on the right track. So look at that side of Tata's business. Looking at the other side, like Air India, I mean, India should have an international airline which makes India proud. But is that the most important thing at this moment? I mean, who flies? Which Indians on the ground are flying and need to fly right now? But as I said, India needs to have enterprises that give India respect as being good Indian enterprise, and Air India is very necessary for Tatas to support because Tatas know and they've got heart in it, and they will do an excellent job of that too.
Let me also encourage Mr. V.R. Mehta, former trustee of Sir Dorabji Tata Trust, to join in this discussion. Mr. Mehta, good morning. Thank you for joining us. Mr. Mehta, for the longest time, the big concern for the Tata Group was that they were heavily dependent on one company, which is TCS, to generate the cash flow. That clearly is changing. Capital policy allocation, cyclical recovery in power and steel. Do you see the shape of the Tata Group of companies and Tata Sons changing now, given how some very large restructuring and capital allocation policies have been changed in the last 3 years? Mr.
Hello.
Mehta?
Yes, I'm there.
Mr.
I
Mehta, would
didn't
you like
hear
to
you
respond?
properly.
I think I'm getting a bit of a feedback. So maybe it's... Mr. Maria, now the Tata Group is a very diversified group. As of now, we are going through excellent times for the economy, where the relevance of digital business for Tatas, which is technology and TCS, is growing. Cyclical businesses like steel and power, they are making a comeback. Travel and hospitality business like hotels, that has gone through downturn and coming back. But do you expect in next coming years Tatas to expand their breadth of operations, or they should now be focusing on scale, size, and only taking the existing businesses up? The reason I'm asking this, Mr. Mehra, is because we understand that Tatas are seriously looking at setting up inroads in the defense sector. They want to enter into the semiconductor sector. They are building up a super app. Recently, they've acquired Big Basket. Is it a good strategy to expand so much?
Look, Tata's is a very unusual conglomerate. And in fact, conglomerates are thought to be bad things, used to be thought to be, or even now thought to be bad things in business because they do too many different things. And I'm going to say, actually, as an investor, you would like to put your money into a diversity of stocks because you don't know how any one of them may do. So it's better to have a diversified portfolio. So you can look at, if you are like maybe the Tata Trusts, investing your money in various companies or letting your money be used by various companies to ensure that you got diversity in the stocks. But that doesn't make then the people who are on top of the group good builders of a conglomerate. They could be good portfolio managers, putting money where money is going to be made and then taking money out of the places where it doesn't seem to be made. So I would rather not look at the conglomerate and Tata's, what its strategy should be through that lens of an investor in various businesses. It should be in terms of how do you grow a diversity of businesses and what is the value of having a diversity of businesses inside your management portfolio. And there where the point comes about, if I might say, values. And this is what Tata's and Ratan Tata has continued that and done it very well, of to glue the group together around values. And so there are internal processes within the group whereby the companies can learn from each other, learn how to manage quality from each other, how to manage and develop human resources from each other, how to build customer relationships, learn from each other, best practices in the Indian context, and now, of course, also internationally as the Tata companies operate internationally. So this ability of the group to learn, members of it to learn from each other gives the group much greater strength, which single companies, even though they may be very successful in their own one business, do not have. And so please look through this lens also. How are these processes being built and continuing to be built in the Tata Group? Now, the third point, which is an important point, which I think comes back to your point, which businesses should Tata choose to areas to do business in? And I come back therefore to building India. And building India means building the incomes of people in India. And to build the incomes of people in India, they've got to be at work at which they are able to learn new skills and grow. So building the manufacturing businesses of Tata's and building every other organization, I think, should be concentrating on building manufacturing businesses in India, because they will enable more people who don't have access to high-level education, which in TCS you had to have. You came out of IITs and so on. So in other words, you're taking the people already well endowed with education, which was provided by the government. And then those people, of course, turned out to be very effective in selling their skills to people abroad at good prices. So that's how TCS and Infosys and our IT sector grew, which has given India great glory. But it hasn't really been able to build, the incomes of people within India. And so therefore, I would, as a citizen of India and a person who has learned so much from Tata, say, I do hope that Tata's in their design of their portfolio will be playing more emphasis on businesses that employ poorer people in India from the rural sectors and enable them to learn and earn and grow their skills, which is what I experienced.
Right. Let me also now again try and connect with Mr. Mehta. I'm keeping my fingers crossed and hoping that he can hear me. Mr. Mehta, the big concern for the Tata Group was that they were over-dependent on one company for their cash flows, which is TCS. Thankfully, that is changing because of the cyclical recovery in the economy, the fact that steel prices are back, power prices have stabilized. Do you see in this decade, there would be transformational changes in the Tata Group, looking at how other businesses are coming back?
Yes, I think, my feeling is that since 2017, February, when Mr. Chandra took over, Tata Sons has undergone a transformative change. And it is, as you said, in 2016, when I did an interview after Mr. Cyrus's removal, I had also mentioned that Tata Sons was over-dependent on two star performers at that time. One was TCS and the other was JLR. They both had been facing them at that time too. But they have now, this TCS has come out of that and has been progressing very well and stabilized its business. JLR did have problems, a lot of problems, but now they are also poised for a big leap. Now, in JLR and Tata Motors, both the performance was dragged down by mainly by JLR, and now JLR is picking up. Although Tata Motors have been reporting losses in the last 3 years, I think now particularly with the EVs doing very well and unlocking the value of EV business through a separate subsidiary business, the whole scenario has changed, and this EV business holds tremendous prospect now, and it is good during this period that the Tata Motors, even though they had such big problems, they did not lose their focus on the EVs, and that is why they are today like the first movers, having the first movers advantage. And in that now, there's still a lot of work to be done, both in the Tata Motors and in Tata Power and Tata Chemicals for completing the whole chain. In Tata Motors, the chain consists of the EVs, then the hardware for the dispensation of the electricity to the consumers. So now in that also there are very good developments, and there are, in fact, I have seen reports of one today. Whatever charging mechanisms are there, they are slow, and they need heavy grid connections, and there is also a lot of waiting time. So for addressing that, there is one recent development I have seen of a doorstep on-demand fast charging service. That is, there's a company by name of Hope Charge. I saw an interview by the people, and they claim that they have patented their technology. They have all the patents available.
Right. Mr. Mehta, so if you have to, let's say, talk about next 5 years, next 8 years, which are the 3 Tata Group companies which you think are on the verge of a transformational change, not a small change, not a cyclical change, but are on the stage of a transformational stage?
Now that is visible already, that the Tata Sons profits in financial year 21 rose from 10,916 crores to 19,000 crores, a big jump. And that is a result of the way now the companies are thinking ahead of their time and bringing in a lot of innovations. And that is why you see not 2-star performers, but now many performers. Even Tata Steel is reducing its debt load. So what I want to convey is that all the companies are now looking up, and this is the transformational change which has been driven by Mr. Chandra, and of course with the blessings of Mr. Tata. So I think it has been a transformative period, definitely, and all the companies are doing very well, and Mr. Chandra deserves all the credit for that. He's shepherding this group now.
Okay, but sir, that does not answer my question. Which are the 3 companies which will be called as the companies of this decade from the Tata stable?
Okay. I think I would put, of course, TCS, you know very well. Then Tata Motors, including JLR. And now I think Tata Steel has done very well in the last few years, and they are going to reduce the total debt of $10 billion very soon. So these 3 companies, to my mind, will be the star performers of the Tata Sons Group, Tata Group companies during the next 5 or 10 years.
Okay, that's the insight that we're getting right now on the entire Tata Group. But Mr. Mehta, great to have you on the show. Thank you so much for taking the time out and joining in today. And on that note, Mr. Maira, I'd like to thank you as well for taking the time out and speaking with us today and sharing all the insight.